Hello and welcome to the NancoVerse. Woohoo! It's the 18th of February and I hope everyone is not freezing to death because I feel really cold today. I don't know what is it. Some days are warmer, some days are colder, but today is damn cold. But having said that, I know I'm gonna miss the cold because I've realized February is my favorite month of the day of the year. Feb is the best. Damn. I mean, I used to think October is the best, but now I kind of I have a brainwash going on where I feel like, no, not really. I do have a bias for October because it's my birthday, and yeah, but I think Feb is definitely the best month of the year. There's that energy in the air, everyone's just feeling good, and that's what I like about Feb. And I would want to start today's podcast with some classic Jocko Motivation. Yes, Jocko Milik is a U.S. Navy SEAL, and he writes. He also has his own podcast. But there's a book that I have, which is called Discipline Equals Freedom: Field Manual and MK1 Mod 1. And in this brilliant book, he has a lot of these quotes and poems that he has written. All of these poems that I think a lot of us, poems and write-ups, which I think everyone, irrespective of your gender, could learn a lot from. And one of them is titled Negative Talk from Negative People. Quote: The old classic. What do you know? What do you do about the negative person talking behind your back, trying to bring you down? Sure, you can confront them and join them in their little game. You can give them satisfaction of knowing that they got in your head. You can turn your life into a grade school gossip hall. Of course, there are times, unfortunately, that you have to engage with people like this. You may have to set the record straight on a serious allegation. You may have to challenge statements that might be damaging to the team or the mission. And when you have to engage, do it professionally. Say something like, I heard you had some pointers for me about how I'm doing my job. I'd like to get your feedback so I can tighten up my game. A statement like that will likely diffuse the scenario. The person will know that there are informants who will tell you what is going on, and that will likely stifle the situation. But let me tell you what my preferred methodology for this situation is. It's simple. Ignore and outperform. What am I saying? Ignore and outperform. It's written in bolds. I want to be a little, emphatic about this. Ignore and outperform. Yes, while you are over there watching me and talking about me, I'm working. I'm working hard. I'm taking things to the next level. You keep gossiping, I'll keep working. You keep talking smack, I'll keep working. You keep chattering about things, I'll keep working. You keep focusing on what everybody else is doing, I'll keep working. You keep focusing on what everyone else is doing, I'll keep focusing on what I can do right. And when you finally look around at where you are and where I am, you will realize that you have nothing to talk smack about. Because you will lose and I will win. And this applies to when people are playing office politics or forming their cliques or working their personal agendas. Of course, sometimes you have to play those games too. But when dealing with people like this, let your first course of action and the fundamental core of how you handle it be very clear and very direct. Outwork and outperform every last one of them. Hold the line. I love Jocko and I love how non-bullshit his writing is. He just gets to the point and gets to the vibe. Yes, so I want to move on with the news for the day, and I hope you guys are finding value in the podcast. Whoever's listening, you guys are the best. I love you guys. So the first piece I would want to talk about is the rising of gold loans. Have you taken a gold loan in your family ever? Gold loans have been there in our it's a fashion in our country. It's a fashion in all countries, to be honest. But something about gold and India, Indian families have a lot of gold, I think somebody was telling me that Indian women hold the most amount of gold in their households. And gold loans have been used for many, many decades to fund a lot of things. And now they're on a rise also because of the dropping incomes. And people need to spend money on stuff. People need money. So, yeah, I would want to read about gold loans. And this is a report by George Matthew. It's an explainer, so here we go. As individuals in the low income category and small businesses continue to be hit by reduced earnings, the gold loan business has been a booming segment for commercial banks and non banking finance companies. With people pledging their gold jewelry for emergency cash, banks have reported a whopping 45% jump in gold loan under outs outstandings as of December 2021. There's been an increase of 45% of in the gold loan outstanding as of December 2021. Damn. As the business continues to boom, the question remains, is it beneficial for the borrower to sell or pledge gold, or and who should take such loans? The rise in loans. The total gold loan outstanding of banks shot up by 45.1% to rupees 70,871 crore during the 12-month period ended December 2021, compared to March 2020 when it stood at 33,303 crore. Wow, so in March of 2020, the outstanding gold loan outstanding of banks was 33,303 crore, and now it is shot up by a whopping 45.1%. Oh my god, so many people have taken gold loans in a period of 1 year and a few months. The gold loan outstanding has risen 112% over the last 21 months. The business witnessed a big jump when the COVID-19 pandemic hit the country in March 2020, and people started pledging their gold for meeting healthcare, agriculture, wedding, and educational expenses. PSU banks, which is public sector undertaking banks, have now started focusing on this segment in the view of the trend. While this is RBI data and relates to business done by banks, industry experts say that if one includes loans extended by gold loan companies like Muthoot Finance and Manappuram Finance, the outstanding will be much higher. To be honest, with gold loans, I've only heard of Muthoot and Manappuram. They advertise a lot as well. How the loan works. The loan to value LTV ratio while pledging gold is 75%. The borrower will get only 75% of the value of the gold that he or she pledges against the loan. If the borrower fails to repay the loan, he or she will have suffered a loss, as they will not have got the full value of the gold. The best option is to sell the gold and get its full value during an emergency situation. The borrower can always buy back gold in stages from the market when their financial position improves. On top of this, the interest rate from gold loans, non-banking financial corporations (NBFCs) in this era of low-rate regime works out to 12 to 18%. Damn, that's a very high interest rate. According to India ratings, unlike other secured loans such as two-wheeler, commercial vehicle, or home loans, where the collateral stays with the borrower and only in an event of default is it repossessed, the collateral in a gold loan rests with the lender for the entire tenure of the loan. In case of a default, the entire collateral will be auctioned by the lender and the money will be recovered. Since gold is a price-sensitive commodity, any default in gold loans typically beyond 90 days calls for an auction, as per internal policies of the originator. Hence, for up to 90 days, the lender makes efforts to recover the loan. Beyond that, the efforts are towards an auction of the gold. So if you've taken a gold loan, it will be typically around 90 days, after which they will sell it. And in the case of, say, two-wheeler loans or commercial vehicles and home loans, you at least get to keep the home, and if you make a default, they will take it. But at the same time, I think gold loans with their interest rates is insane. So should you take a loan? In line with all interest rates in the economy, the interest rates on gold loans also are low. State Bank of India is offering loans at 7.3%. However, low rates should not be the only reason for individuals or small business owners to go for a gold loan. Experts say taking a loan in these times could be both a good and a bad idea depending upon who you are and what are you borrowing for. Taking a loan for consumption needs or to fund a marriage may not be a good idea if your income is under stress. If you are unable to repay the gold loan, you run the risk of financiers selling the gold you pledged. However, if the loan is for funding short term working capital needs and to cover up for a stretched payment cycle, experts say that one can go for it. Quote, for a small businessman whose need is driven by a rise in the payment cycle and who is looking to cover a gap for a few months, it is not a bad idea. It's a bad idea if you want to take up a loan for a wedding. I think that is a dumb move. Please don't do that. Please don't pledge your gold for a wedding. Just don't do it. I'm no expert, but at the same time, I think experts would agree with me when I say this. Just don't do that. It's a very, very dumb move. A lot of people also take up loans for frivolous things. They want to take up loans for a holiday that they haven't been able to save for, and when they come back, they have to pay an interest rate of 12%. Like, bro, just chill, just relax. You do not have to impress people that do not care. If you live or die, they don't give a damn, man. So yeah, a lot of people want to go on holidays that they can't afford for the gram, for the Instagram, so that their friends can see, oh, look at this guy, he's having such a great time. Look at this girl, she's having such a great time, and look at my miserable life out here trying to save my money. But for the last thing this person is just swiping them credit cards and taking them gold loans so that they can post a nice picture on Instagram. And trust me, it's a very real thing. The older you grow, the more you realize that people are just full of crap sometimes. So just be in your good energy, man. Save your money. But at the same time, do not get bored. That's not what I'm asking you to do. What I'm asking you to do is do not take loans for things that you do not need to take loans for. That's all I'm saying. Yes. Moving on, I would want to bring the attention of the listeners to an editorial by Ishan Bakshi in the Indian Express. And he talks about the issues of underlying architecture of digital currency. Yes. We talked about the digital rupee earlier on the podcast. And now I also want to bring our attention to this article that looks very well written. So here we go. Checklist for a digital currency. Issues of underlying architecture, effects on cash circulation, and banks must determine RBI's design. In the Union Budget presented a few weeks ago, Finance Minister Nirmala Sitharaman proposed to introduce a digital currency in the coming financial year. While the RBI is still in the process of figuring out the contours of what a digital rupee will look like, it is expected to carry out pilot studies in this area shortly. There are several design/conceptual issues that will need to be examined. How the RBI views each of these features will determine the form, functionality, and ultimately the utility of the digital rupee. The first consideration centers around the underlying technology architecture. Should the CBDC, which is Central Bank Digital Currency, be based on the distributed ledger technology a la Bitcoin? While there are inherent advantages to a decentralized consensus approach, some argue that this architecture is, quote, slow and inefficient compared to centralized ledger systems. The time it takes to validate and settle transactions is high, and the number of transactions that can be handled by the network is low. For instance, it takes 10 minutes on average to settle a Bitcoin transaction. Thus, there are issues of scalability with this framework. Second, will the digital currency be account or token based? At its core, an account based framework like bank deposits links ownership with identity. On the other hand, as some have said, a token based framework like cash provides for greater anonymity. While the former could potentially increase the risk for banks, the latter raises concerns such as money laundering. Third, what will determine the supply of CBDCs? If the central bank decides to issue CBDCs over and above the incremental physical currency that it prints and injects every year into the economy, it will lead to a significant expansion of its balance sheet. The RBI will then have to purchase an additional equivalent amount of government debt or any other securities. This will raise troubling questions on how the central bank allocates its investment portfolio. However, the RBI can choose to limit the supply of digital currency by substituting it for some part of the incremental physical currency it injects each year. Fourth, accepting the latter option may effectively result in capping the digital currency in circulation and thus the amount that can be held by individuals and companies. This will, in turn, limit its usage, at least in the initial years. Imposing limits or capping the amount that can be held as CBDC will also reduce the risk of deposits shifting away from commercial banks, thus allaying the fears that during times of financial distress, depositors will move from bank deposits to CBDCs and aggravate the crisis. Fifth, the central bank will also have to decide if the digital currency will be interest bearing. This, along with the quantum of CBDCs in circulation, will have a bearing on the financial system and monetary policy. If the RBI opts for the interest-bearing option, then the digital currency without any caps will emerge as a perfect substitute for bank deposits. Banks will then face the threat of deposits shifting to the CBDC and losing out on their source of funding. As some have argued, they may respond by raising funds at higher costs, which will impact their margin or lending rates, thus affect credit demand. Considering these implications, the RBI may have to explore the possibility of putting in place a permanent, quote, window for banks to help offset any asset liability mismatches that may arise. On the flip side, though, an interest-bearing CBDC without any caps can also morph into an instrument of monetary policy. CBDCs can help improve the efficacy of monetary policy by reducing the problems associated with the pass-through rates through banking channels. However, as some have pointed out, the notion that CBDCs will help central banks face the zero lower bound does not really apply in developing economies like India, which, at least for now, do not face similar constraints. I do not know what zero lower bound means. Anyway, sixth, there is also the usage of cash to contend with. Unlike the economies of US and Sweden, the Indian economy is still characterized by the widespread use of cash. That's true. In fact, as a percentage of the GDP, currency in circulation is higher now than before demonetization, despite a surge in digital transactions during this period. This is mind-boggling. Anyway, limiting the physical currency in circulation may in fact have an adverse effect on parts of the economy that are predominantly dependent on cash as a medium of exchange. The large informal economy, especially the agricultural sector, comes to mind. While this fits in with this government's desire for greater formalization, forced formalization will render many informal units uncompetitive and could cause disruption in agriculture. Demonetization. Lastly, in its pilot studies, the central bank should also explore to what extent the much touted benefits of issuing CBDCs will materialize in India. There is no reason to be skeptical as India already has a robust payments infrastructure in place. The domestic payments ecosystem is characterized by low transaction costs and quick turnaround time. And unlike China, there is healthy market competition. So to what extent the introduction of a CBDC will aid in further accelerating financial inclusion, facilitating low-cost transactions for low-income households is debatable. Some have also argued that as a CBDC is a liability of the central bank and not commercial banks, it will minimize the depositors' exposure to their bank. But this argument fails to account for the presence of public sector banks. It is difficult to imagine a scenario where the union government or the regulator allows a public sector bank to fail or depositors not to be paid in full due to political considerations. Moreover, this argument also assumes the absence of any limits on the issuance and holdings of CBDCs. Perhaps in formulating its views on digital currencies, the RBI should simply be guided by the desire to preserve its monetary sovereignty. Either way, it should tread carefully. Like all of us, always tread carefully. Be careful of the decisions that you make. And a central bank digital currency is something I'll be keeping my eyes on. There's a lot to understand. Whenever we talk about these about cryptocurrencies, digital currencies, about NFTs, I've realized that there are two types of people. One is a type that is extremely defensive about the fact that, oh man, I really don't understand anything. And then there are the types who are like, okay, let me tell you, and they just seem to know everything. I'm skeptical of both those people, because the people who tend to say that they don't know anything, and the people who tend to say that they know everything are people who are part of the first group but they don't want to accept it. So I want to be in the part of the people who are trying to understand this day by day and build their knowledge, read more articles and talk to experts about this. So what are your thoughts on a central bank digital currencies? Please do let me know in the comment sections. Woohoo! Moving on, there has been a push by the government for green hydrogen plants. Green hydrogen is something that is touted as a solution to our coal generated fossil fuel burning energy needs. Green hydrogen is known for having no carbon footprint, if I'm not wrong. Yeah, how is green hydrogen is hydrogen generated entirely by renewable energy. Yeah, so it's hydrogen generated entirely by renewable energy. There's a different types of hydrogen production. There's a brown hydrogen. There's different types of hydrogen. I would want to get back to you guys on this. But green hydrogen is hydrogen generated entirely by renewable energy or from low carbon power. Green hydrogen has significantly lower carbon emissions than grey hydrogen, which is produced by steam reforming of natural gas, which makes up the bulk of hydrogen market. Renewable energy plants set up before 2025 to power the production of green hydrogen or green ammonia will get free interstate power transmissions for 25 years to reduce carbon emissions and boost domestic production of green hydrogen to 5 million tons by 2030. The center on Thursday announced the green hydrogen ammonia policy. The Power Ministry said renewable energy plants of green hydrogen and green ammonia producers will be given connectivity to the grid on a priority basis and will be permitted to bank surplus energy with discoms for 30 days and withdraw it as required. This will reduce dependence on fossil fuels and reduce crude imports. The objective also is for our country to emerge as an export hub for green hydrogen and green ammonia. The government is planning to mandate that oil refining, fertilizer and steel sectors, which are key users of hydrogen and ammonia, use green hydrogen for a certain proportion of their requirements. The policy provides for a quote waiver of interstate transmission charges over a period of 25 years for manufacturers of green hydrogen and green ammonia for the projects commissioned before June 30, 2025. The release said, adding renewable energy plants supplying green hydrogen ammonia producers would be given open access to the grid within 15 days of receipt of their application. Green hydrogen is also produced via electrolysis using a renewable energy source. We will be a world leader in green hydrogen. We expect to be a hub from which we will export to different countries, Power Minister R.K. Singh said. It's a good move. I think it's a very, very important move to have green hydrogen and making sure that our planet is not completely bombarded with fumes for our own sake. A lot of times we think of it, oh, we need to save the planet. But it's not the planet that we need to save. The planet is fine. It's the people that need to have a better planet to live in. So yes, hopefully green hydrogen takes over. And yes, with this, I would like to end today's podcast. I have been following so many news, and speaking so much is making my jaw hurt, but I am learning so much. This is a beautiful, great process. I do not care how many people listen to this or not. For me, this is about generating knowledge. For me, it is about creating value for myself and for my listeners. So I hope you guys enjoyed this episode of the NancoVerse, and keep listening, keep supporting. I want to wish everyone a great day ahead. Hasta la vista, baby. Jai Hind.